Hi everyone and welcome to DeFi Daily, the channel where every day we talk about DeFi, go through different analysis, tutorials and news. Today we are going to talk about how to choose a DeFi platform and what are the risks that you can encounter in the moment when you are choosing one platform and how often, consequently, you have to change the platforms that you are using for your DeFi investment. Before to start, I would like to ask you to subscribe to the channel and leave me also a big thumbs up to help me spread the word, reach more people and grow the channel. That's just a small action, but really means a lot to me. Remember that all the contents in this channel are just for educational purpose and nothing has to be intended as a financial advice. If you want to invest in anything, that could be great, but please do always your own research first. Okay, let's start saying that we can divide all the different platforms into three different categories. The first category is the one that we can say that is comprehensive of all the platforms that we can consider them quite safe. And in this category has inside all the PancakeSwap, Curve, Eve, all the platform that has a quite long history. Obviously, when we are talking about DeFi, long history, it is just 1 year because the DeFi ecosystem is so young that no platform has a long history for real. But in any case, when we are talking about a platform like, as we said, Curve, PancakeSwap, and all the Uniswap and so on, all the platform that has been into the market since months and even a year, we can have a decent track record that it helps us to evaluate them. The second category has inside most of the platforms that we have talked about in this channel during these 2 months together. And all of these platforms are platforms that are quite young because most of them has a history just of 1 month, 2 months, but nothing more. And even if they are backed by some great investor, most of the time they have collected quite a decent amount of capital. They are audited by many different companies and so on. Even if in this case, this kind of category has a higher risk than the first one. And the reason is simple. This category has inside platform that could be much more volatile. We don't really know how the market will react to them because they are just at the beginning of their journey and they haven't been through some major correction. They haven't been through many of the problems that are typical from this market in the moment when a platform is becoming an established company. And also not to mention that also the APR, the APY could be really volatile. Because if, for example, on PancakeSwap, we know that if you stake a cake, you will always receive this kind of yield, and also on Curve, the kind of APR on the APY are quite stable. Yes, I know that they are changing continuously, but they are changing with a volatility that is much less than what you see on all of these platforms into this second category. Let's say, for example, all the new platforms into the DeFi ecosystem of Solana or Fantom, the APR and APY in all of these DeFi platforms are so volatile because they are affected by the amount of liquidity, amount of total value locked inside of the platform. And this kind of number is changing really fast and it is affected by the hype around a specific platform, by the incentives that a platform could have added in the first part of his journey, from the different situation of the market. So it could change a lot during the time. And that's the reason why one day you are seeing some incredible APY and not even the day after you are seeing a new APY that could be much less. And the reason is related to the fact that these platforms are really young, so you have to really be on track and check them continuously, because the real yield that you will gain can change any moment soon. Not to mention that all the tokens in this category have a much higher volatility if we compare them to the tokens of the platform that are inside the first category. Let's say, for example, the first category we can find Uni, Sushi, Cake, Curve, and all the tokens from the major platforms. And the volatility of this token is lower compared to what we are seeing on the tokens of the platforms that are they are pretty young. For example, in many platforms that we have analyzed together, we have seen results like going 5x in not even a couple of weeks, but also going down with a dump by 60% in just a couple of hours. So that's quite normal for a platform that has a token that is so young and it is just entering into the market. And this, even from one side, could be also an opportunity, because a token that has the ability to go so high could also be an opportunity to earn more yield from this kind of platform. On the other side, it is also a risk, because volatility is playing on both sides. On one side, it is an opportunity. On the other side, it also could be a cost or a risk. And you have to be aware of it. I'm not saying that it's wrong to use this kind of platform or invest in an asset that has a really high volatility. That could be great, but just be aware that the volatility is not equal for two different projects. The projects in the first category are much safer and are offering you a much less volatility. All the projects in this second category are much more volatile and they have a much higher risk. There is also a third category. In this category, we can add all the different projects that are so young with a really low total value locked, that are just at the beginning and maybe nobody knows, or they are offering some incredible APY that's almost unbelievable. In this category, we can add all the different platforms that we can call like exotic. So all the platforms that are not yet established. And it doesn't mean that they are not legit, because yes, in this category, maybe you can find also some platform that can be less secure because it has not been audited, because you don't know which is the team behind, and so on. But in this category, you can find also platform like what I presented to you just a couple of days ago, and I'm talking about Sword Markets, that I will leave you also the link in the right corner here. This platform is legit. It is backed by a great investor. It is also the only one regulated, so it's more safe than many other platforms outside. And it's also offering you some great APY, because right now, if I'm not wrong, they are offering something like 500 APY on assets like, for example, Ethereum, and a pool with Ethereum inside. So a platform like this has all the prerogative to be an interesting platform. What is the point and why I'm putting it into the third category? The reason is quite simple, and is because it is so young. The total value locked inside this platform right now, it is just 1 million. The smaller is the platform, higher is the probability that everything can change so fast and any moment soon. So I'm not saying that it's a bad option to use this kind of platform. Not, because most of what we are used to call gem, all the gems, are coming from this category, from this third category, because it is here that you can find all the platforms that can really explode any moment soon, and that are really able to give you the 100x that you have the ambition to reach. But on the other side, you have to be aware that it doesn't matter if the platform is audited, it doesn't matter if it is backed by investors. What really matters it is that right now it is so small that everything can happen, and the risks are much more higher than all the platforms into the second category and into the first category. So let's try to summarize what we have said. We can classify all the platforms into the DeFi ecosystem into three categories accordingly to the risk, to the volatility of each platform. Into the first category, we have the more established platforms that are offering you probably less, a lower return, but with a much more stability. On the other side, going down to the second and then to the third, the risks are going higher and the volatility is going higher, but obviously also the possible return could be higher. I'm not saying that it's better to use a category or another one. It really depends from your strategy and how much time do you have to invest to stay behind what is going on into the market. Because remember, higher is the return, higher is also the commitment that is required by you. Because as I said, everything can change so fast that you have to be ready. You can't just say, I will put inside 1,000 and I will forget it because I believe that this platform will do 100x. Yes, that's possible, but remember that this kind of strategy is just like going to buy a ticket of the lottery. That's perfect. I'm not saying that's wrong, but just be aware of what it is, because obviously much more time do you have to pay attention to what is going on into the market, how the different platforms are changing. Much higher is the probability for you to succeed. If you don't have so much time, if you want to just something, let's say a plug and play solution, it's much better to just use the more established services, the more established platform, because they are much more safe, and in some case they are also offering to you some decent yield. For example, PancakeSwap with the 70% on cake, it's quite a decent opportunity. As always, that's not a financial advice. What I really care right now is to you to understand that the final result, how much you will obtain in the moment when you will go to close all your positions, is not just a matter of APR or APY. It's something that is more complex, and it is related to the volatility, to how fast did you react to all of this change into the market, and so on. That's the reason why it's better to be aware and to classify the different platforms in different tiers of risk and volatility. And this is something that you should do before investing in anything. You can even use a diversified strategy. Let's say that if you have 100 to invest into DeFi, you can use 50 into the more secure and more established platforms, the 35% into the second category, and the last 10% or 15% into the higher risk. That's just an example. The numbers can change according to how do you want to set your strategy and to your preference. There is no real better or wrong strategy. It's just a matter of being aware of what you are doing. Because remember, in the long run, the amount of money that you will earn, it really depends from your ability to manage the risk and to minimize it, maximizing on the other side your ability to gain some high yields. Guys, as always, if you have any questions, just write me in the comments below and I will be more than happy to answer to you. If you appreciate this kind of content, leave me also a thumbs up and spread the word in order to sustain this channel and to help me reach more people and continue to do this kind of work. Guys, I will see you tomorrow with another video, and bye.